It's time to review activities at the Nigerian Exchange Limited. My colleague is in the studio, Effiong, Ekop. Effiong, the market is down today. This is significant, more than 1% down.
Very seriously, very seriously. It's on the back of huge losses taken by big banks, the likes of Dangote Cement, coming down by maximum 10%. You have First Bank holding 4.26%. Then the big cement company, Wapco Lafarge, down almost 2%. Zenith Bank, Dangote Sugar. So it's a question of the big leak taking down the market. And we can understand this. It's on the back of investors and fund managers' rush to cash in on the 2 weeks that we had seen stock prices, getting up reasonably to a level that a majority of them now moving, to take advantage of. Think of what UBA has done in the markets. UBA has been able to rattle the senses of investors and fund managers who didn't expect that interim dividend from that bank could get as much as sooner. And so you see many people, moving in. And, the market is just that the time that investors see any type of opportunity they want to take, they don't want to, we can understand the economic pressure. And, that's the see. So many of them have been sitting on sales windows. They continue that exactly. So the big company, especially Dangote Cement, that's what is dragging down the market.
So what do you think about this? This is the start of a new month. I'm not happy that we are starting on this note. It looks like this is what we might see as we move towards the end of the year. Exactly.
The first trading day of this month of October
was positive.
It was negative. It was in red. And, goes round. I don't know whether tomorrow, Friday, we are going to round off, the week that way. I can understand the sentiment that maybe they take money, out of the market in order to come back in a, not too distant time. Because this last quarter, we expect, and definitely there will be, that activities will somehow heat up. I'm expecting that any moment from the third week of this month, we should see stock prices beginning to, mark very well. And we will see some of those banks that had recapitalized, they will bring what they have collected from, new entrants to come and list in the market. Then the prices should start moving. Already, Fidelity and FCMB, we've seen, reasonable level of rises, in their securities prices. So others will follow. I believe that it will get to a point that many people will have to, understand what is happening in the stock market. So they would look forward to that.
I must thank you so much, my colleague, the market editor, Effiong Ekop.
It's a pleasure.
The Ethiopian government has announced that the country's economy grew over 8% in its fiscal year, which ended July 7th. The Minister of Planning and Development, Futsuma Asesa, said the building on the 8.1% economic growth in the last fiscal year that the African country expects double-digit economic growth in the current fiscal year, supported by a recent move to implement comprehensive macroeconomic reforms. She said agricultural and industrial sectors contributed significantly to the country's overall economic growth, as the first phase of Ethiopia's homegrown economic reforms is paying particular attention to these sectors. The minister singled out the country's industrial sector, which has grown by 9.2%, with the big and medium manufacturing industries registering a 10.2% growth. Ethiopia, which is about 132 million persons, is the second most populous nation in Africa after Nigeria and one of the fastest growing economies on the continent. Asian shares retreated for a 32-month peak today as a sizzling rally in Hong Kong took a breather, while Japan's Nikkei jumped as the risk of further tightening in monetary policy faded. FTSE features narrowed earlier losses and were last down 0.1%. Eurostock 50 features still fell 0.5%. Nasdaq features dropped 0.3%. S&P features slipped 0.2%. Several Asian markets, including South Korea, Taiwan, and mainland China, are closed for the day. MSCI's broadest index of Asian Pacific shares outside Japan fell 1%, largely driven by a 1.6% drop in Hong Kong Hang Seng index after meeting with the central bank's governor, Kazuo Ueda. The Nikkei outperformed with a jump of 2% as Japan's newly elected Prime Minister Shigeru Shiba said the country was not ready for additional rate hikes. The Philippines International Revenue Agency has revealed plans to impose a 12% value-added tax on digital services offered by tech giants such as Amazon, Netflix, Disney, and Alphabet to level the playing field with domestic brick-and-mortar players. President Ferdinand Marcos Jr. had earlier signed into law the imposition of VAT on non-resident digital service providers, such as streaming services and online search engines, but now only domestic digital service providers are now subject to paying it. According to the Commissioner of the Bureau, Mr. Romeo Lumanju, this will promote fair competition and amongst businesses that are profiting from consumers in the country. The Presidential Communications Office reveals that government aims to allocate 5% of revenue to fund projects for creative industries. The office added that education and public interest services would be exempted from VAT. Crude oil prices rose today as a prospect of widening Middle East conflict that could disrupt crude oil flows from the region overshadowed stronger global supply outlook. U.S. West Texas Intermediate crude rose to sell at $71.56 with an upward price review of 2.08%. Brent experienced an uptick of 1.94%, selling at $75.33 per barrel. Bonny Light sells for $78.62 with a decline of 2.84%. And for the OPEC basket, dealers are offering $71.34 with a downward price margin of 2.27%. Well, that's Business Nigeria today. Thank you so much for being a part of it. I'll see you tomorrow. Stay safe, get busy, always make the cash. I'll see ya.